Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 1st of October. All right, now let's just have a quick look at where that North American finished. The US Treasury yields just dipped a bit. I mean, the 30-year, I know, was up at 210 there a couple of days ago. It's back to 204. Now, that's expected. You know, you get that little spike to the top side, and it just starts to retreat a bit. Equity markets are still pretty nervous about upcoming sort of higher interest rates, you know, the Fed's tapering measures of asset purchases and these things, how it's going to sort of impact. Overall, though, the dollar is maintaining its path or trajectory to the top side, right? So that's a good thing to see. Commodities, a bit of a standout here, just having a look here, just getting whacked across the board. And the other major pairs, well, we did see with that sort of retreat in the US Treasury yields, takes a bit of the pressure off some of these currencies. Now, sterling managed to have a bit of a bounce, as did the Aussie, and the Kiwi sort of broke down through that major support level, coming back to retest that. So that's sort of acting as resistance at this point. Now, I don't say this is the normal cycle of a trend, right? There's no real bounce here in the, I was going to say the euro, right? It's sort of just treading to the downside, but you would expect these currencies to go up, come back, test the trend line, and then continue higher. That's the normal approach of a trend. Now, we've picked up that dollar yen is tracking the US 10 years very closely. The US 10 years started trading sideways a day ago. And then in today's trading in North America, we've got that dip down in the treasuries, in the 10 years in particular, well, across all the bonds. And you can see how closely that's driving dollar yen. So just keep an eye on that, right? So if the bonds start trading sideways, doesn't mean it's over. Right, keep an eye for the next leg of activity. And if you are looking at the US, or if you've got access to the pricing, right, of those bonds, you can potentially be trading dollar yen momentum around that. So what do I expect today? Well, any sort of retracements at this point are going to be worth buying or getting long dollars, right? Okay, we've got all next week. Next Friday is the non-farm payroll. So we've got a long time to wait before we get the final outcome of whether the dollar does go up or down. But so at this point, I'd be looking to sell retracements. Now, euro back above 116. We've got some levels here now, and this is the big question, right? Like, how far does it retrace? Well, you sort of need that retracement to work out where it is, right? The trend lines provide some sort of resource as to how far it's going to retrace. Aussie and Kiwi had resistance trend lines or previous support trend lines, which were acting as resistance to give you some sort of gauge. Euro and sterling, not so much. But now that they have sort of come back a bit, you've got a better measure of where those retracements are. Dollar CAD back into the range. Oil pretty steady around $75. Now, the main part is we're coming into Friday, right? Well, we had month-end trading yesterday, so there's a lot of fixings. That's probably where those price spikes. If I just wind out sterling a touch, it looks a bit more similar to the Aussie. These price spikes in the sterling, Aussie, Kiwi, not so much in euro. We didn't really see it, but they would be probably come around the month-end fixing requirements for a lot of hedge funds, right, where they rebalance their portfolios depending on the on that portfolio basis of where their equity positions are, etc. So that's one of those month-end events that you can never really tell what's going to happen. You can have a bit of an idea if there's a big one-way action on the equity markets, but outside of that, it's always hard to gauge what their portfolios are. So that's come and gone, right? But we are now coming into the end of the week, right? So you've got to expect a little bit of profit taking as we come into the weekend. So what we might see is euro might just come back just a touch. I would expect them all probably just to rally just a little bit and then start trading sideways as we approach the weekend, right? There's still that overall risk on the weekends around geopolitical events, etc. That's enough to probably take a bit of risk off the table. So, and that prepares us for next week. Now, if you are, as I said, if you have got access to the live rates and updates on bonds, keep an eye on dollar yen, because that yellow line is the bond price. You can obviously see the bars there. That's dollar yen. It's broken down here. I mean, if there was a further pullback in the US Treasuries, well, dollar yen should follow that down to the downside. That's probably one pair to look at. Dollar Swiss is back at support. once again, bond prices continue to fall. You'd expect that to sort of filter through into dollar Swiss, and we should see stop losses triggered underneath that support line. That's the easiest trade. Obviously, if they bounce, well, then it kicks off that trend line. Now, outside of that, it's hard to get super excited as we come into the end of the week, right? But I've got to say, there's a bunch of things coming out today, economic data releases, which are quite interesting, where they could create a decent level of activity, price activity, momentum in the currencies. You've got German retail sales and manufacturing PMI data, and you've got the early inflation numbers there out of the Eurozone, right? So keep a close eye on that European session. We may get some more insight into what is happening in Europe. Once again, if these numbers are a little bit stronger, then we'll probably see, Euro definitely come back towards 116, maybe just above it. If they're weak, well, it may just work into just dribbling lower for the remainder of Friday. And then you come back down here in the North American session, we do have PCE price index data, right? A good inflation number that the Fed looks at. So keep an eye on that. And we've also got Canadian GDP and some manufacturing PMI numbers there as well. Now, dollar CAD for me is like caught between Canadian data, US data, and the oil impact, right? It's not exactly an easy trade by any stretch when you look at the charts. And if I just give you a look at that, it's one of those things where see how we've had these support and resistance trend lines matching up, breaks through the downside, top side, and we're back trading sideways. It's at this point here where I would usually come back and then reassess the trend lines to their current levels, right? And you'll find it's sort of back in the middle of the range. And that gives you a bit more perspective of where the technical setup is for dollar CAD. But it's not exactly easy with oil sort of sitting stagnant now and trading sideways. It's really dominating. And I don't know, we need some big difference in those Canadian GDP numbers to really get the house rocking. I don't know if that's going to be the number to do it. And just underneath that, we've got some ISM manufacturing numbers as well, and the University of Michigan sentiment, the final numbers there. Usually not much variance in that number, but the ISM manufacturing number is definitely one to keep an eye on, right, as we go through that North American session. And you're looking for, okay, dollar strength or weakness. Okay, always keep a close eye on the bond prices and see if it's impacting that as well. You think stronger numbers would go towards the case for, tapering those asset purchases quicker, and that leads us to higher rates. Weakness in those numbers, you should maybe see the treasuries fall, and that may be where the chance is to get into, say, dollar yen or dollar Swiss, because that's where the dollar trade is really focusing at the moment. All right, guys, that's it from me. Interesting week, I tell you. Especially with the movements in the bonds, equity markets are spicing up. Currencies, well, the dollar's starting to rally, but next week is huge with non-farm payrolls, etc. It's going to be a huge build-up because it's one of those defining numbers that if we do get really good non-farm payrolls, well, it seals the deal for the Fed. They'll start tapering those asset purchases, the dollar rallies, and we hopefully get a good medium to more longer-term dollar trend than the sort of weekly dollar trend adjustments we're getting at the moment. And that's where the key to sort of bigger cash is getting those clearer trends, because we know what to do. We know where the direction is. And in fact, you can even get in sometimes at the wrong levels and still make money because the trend is easy to go with. All right. So that's where the big action is. Not a bad idea to go through. If you've got the calendars up, just have a flick through, see where the pressure points are, see if there's any other major data coming out. And then you can start to really prepare yourself for the big event it is. And that's those payroll numbers. And we want to see how they come out. All right, guys, have a good weekend. Good Friday trading. And we'll catch you next week. Cheerio.